is that since they have to at least make a lot of provision, and also their liquidity ratio has to be well covered vis-a-vis the risk that they expose themselves to, I think they may not really have much fund as such to continue to do the core business that they do. So that may actually affect their profitability going forward. But about their strength and continuity in business, I believe that they are really good to go.
Okay, well, I guess we just have to wait and see how that plays out. So for trading this week, what are your thoughts and what is your forecast? Where will investors be looking for value?
Well, I think the banking sector, at least to an extent, for some of them, like Access Bank, like UBA, I believe they've not really enjoyed the kind of traction that we have seen in Zenith and GT Bank. And I think investors may really be looking at that, since also they are declaring interim dividend, and that definitely may pose an opportunity for investors. So I think the banking sector stocks will still readily be the investors' tools. And I believe also that with the price of Dangote Cement and a few others, I think they also may actually be the tools of investors. But for me, I think the banking sector stocks will just carry the day and the week.
All right, Rotimi, thank you for that. Thank you for talking to us today. We appreciate your time. Rotimi Fakeje, stockbroker and Cap2 market analyst. Now, Nigeria's economy is expected to contract further in the coming quarters. However, the central bank says its outlook for the economy is mildly optimistic. Johnson Chukwu, CEO Carry Asset Management, joined CNBC Africa's Christy Cole earlier for an assessment of the Nigerian economy ahead of the country's expected inflation numbers and September MPC decision.
The central bank's position that the economy is mildly optimistic, it's when you compare where we are today and where we were in the second quarter of this year. You recall that the economy contracted by about 6.1% in the second quarter of this year. The economy was on near total lockdown in the second quarter of this year. Of course, we've seen the economy is opening up. We've seen virtually all the sectors of the economy has opened up, but for schools that are just about reopening. So expected in terms of economic activities, you should see an uptick, an improvement compared to Q2 2020. So I think that's where the optimism of the central bank is coming from. But you also made reference to the DMO's position, and if you look at our debt profile, we've seen a major increase in our debt profile. Like you rightly pointed out, we're currently looking at a total debt about 31 trillion naira, total foreign currency debt about $31.4 billion, total in terms of debt dollar value, our total national debt about $85 billion. So we've seen a major uptick in major increase in our debt profile, because government revenue has been on the downward trend in the past 4 years. If you look at the budget, federal government budget to total actual expenditure to total revenue, we've seen a year-on-year gap or deficit of close to 3 trillion naira. And that has been borrowed either from the central bank or from any of the multilateral or bilateral agencies, or even from the capital market, either Eurobond or local capital market with debt through the debt management office. So we've seen this increase in debt, which was a result of deficits in terms of government revenue vis-a-vis government expenditure. So that also meant that in terms of headroom for additional borrowing, the government is actually a bit constrained. The government does not have all the latitude as it stands today in terms of debt service to revenue to continue to borrow. So that will put a cap on the ability of the government to refill the economy from the debt market.
Now, Johnson, given these metrics that you have highlighted, I'm interested in the manner of conversations that you have had to have with investors. What are you telling them these days, and what do they say back to you as far as their sentiments on Nigeria's economy are concerned?
Well, I've segmented them into local and foreign investors. For the local investors, they have limited options. I mean, you know, Nigeria's currency is not floated. So you really don't have the latitude to invest outside the country. So you find out that most local investors are limited to the options of investing in local instruments. So for such local investors, we are looking at what in the short to medium term will give you a better yield within the metric, within the yield environment. And today, we're dealing with local investors who are investing in Eurobond, those who have access to foreign currencies that can invest in Eurobond. We're dealing with some local investors who are cherry picking on some equity stock that have strong dividend yield prospects. Of course, we are now in a benefit season where a couple of companies are announcing their half-year results and also declaring interim dividends. So investors within the local environment are focusing on that. Then if you look at the fixed income space, you find out that there's a lot of contraction in yield. We are dealing with negative real interest return on fixed income instruments. If you compare the current yield to where the inflation rate is. I mean, inflation at the last report print came at a print of 12.82%. So in terms of fixed income yield, we're seeing negative real interest return on for those who are investing in fixed income instruments. But for investors, like I said, local investors don't have the latitude to go and invest outside the country because of difficulty of, in fact, the limitations of even accessing foreign currency and restrictions imposed on major fund managers and the pension fund administrators from investing in foreign currency assets. Then for foreign investors, the paramount issues to them is the liquidity in the FX market. A lot of foreign investors are still trying to get out their investments, which they have sold, but are unable to access foreign currencies. So the priority for foreign investors is actually first to access foreign currency and exit in the short term, and probably watch how the government harmonize the foreign exchange markets. Good thing that the government is pushing towards the harmonization of foreign exchange market, and hopefully, with the lot of reforms we are seeing in the fiscal space in the past couple of weeks, we expect that the economy will be better positioned to be attractive to foreign investors. We've seen the government adjust the exchange rate twice to about 379 naira to $1 in the investor and exporters window. We've seen the government take out or deregulate to a large extent the price of petroleum products. We've seen the government in the past couple of weeks adjust the tariff on public electric supply to be reasonably cost reflective. So these are issues we've been pushing, and these are things that are beginning to excite foreign investors, that they believe, though they are sitting on the fence, they believe that the economic environment could open up in the short term, and you could see a return of foreign investors.
That was Johnson Chukwu, CEO, Cowry Asset Management, speaking on the state of the Nigerian economy. That's our show for today. Many thanks for being a part of it. Remember, you can keep all the conversations going. Just connect with us on Twitter at CNBC Africa. You can also send your thoughts to my Twitter handle too. It's at Esther O. Awuni. From myself and the team, it's bye for now.
By Boa Group, unlocking opportunities.
The government faces two challenges: dealing with the health crisis and rebooting the economy. The strategic focus for Gauteng is currently on smart mobility as an enabler. What can be done to rebuild the trust between public transport operators and passengers?
Given that the virus itself cannot spread on its own, it needs humans to move it from one place to another. And because public transport is often in a confined space, it really presents many challenges.
Probably about 20% of our passengers don't have access to cars. Is that every single one of them has obeyed the directives that have been given. They've worn masks, they've sanitized, they've maintained very good social distancing on this. And for us, it's been about being able to accommodate the numbers and be sure that however many people arrive, we can transport them as safely as possible.
As a regulator, as part of the support we're giving to operators in this instance, we've been assessing their safety plans, and we are obviously putting a key focus on ensuring that there is safety and security of their assets. primarily, but also the safety of the passengers.
Green chemistry is saving red, white and rosé.
We are pressurizing CO2 to go inside the cork structure and extract the volatile compounds from the cork.
Green solutions turning electronic waste into a golden opportunity.
These are the microbes that have gone into solution and plucked out a particular metal that we want.
Can nature make chemistry more sustainable?
Nature is our greatest design teacher.
Chemistry going green on the next Sustainable Energy.
Welcome to Closing Bell East Africa. I'm Arnold Kwizera coming to you live from Kigali, Rwanda. Coming up, we take a look at the agriculture market access, the latest on Rwanda's Ejo Heza program and the latest between UPL and the FIFA Foundation. Now, feel free to comment on any of these topics by tagging us on Twitter at CNBC Africa. Closing Bell East Africa starts right now. But first, today's regional top stories. We'll start off in Kenya, where the country is at high risk of external debt distress as a result of foreign currency obligations growing faster than income from abroad. Now, according to the National Treasury, the ratio of debt to services costs to exports will remain above the 21% threshold that the International Monetary Fund recommended until 2025. Now, in May, the IMF raised Kenya's risk of debt distress to high from moderate due to the impact of the COVID-19 pandemic. By the end of June, Kenya's debt stood at a whopping $61.7 billion, translating to about 65.7% of the country's GDP. Moving on, but staying in Kenya, well, the nationalization of the national carrier, Kenyan Airways, has suffered a setback after the Kenyan parliament stalled a proposed law that seeks to return the national carrier to government ownership due to the lack of public participation. Now, the government had a target of completing the deal by the end of October, but this legal hitch will further delay the plans. Kenya Airways was privatized 24 years ago, but sank into debt and losses in 2014. Finally, schools and institutions of higher learning in South Sudan are set to reopen after the country's Council of Ministers lifted the ban on learning imposed in March in an effort to curb the spread of the COVID-19 pandemic. Now, according to South Sudan's Informational Minister, Michael McQuail, the decision was made after a comprehensive study by the National Task Force on COVID-19, which showed a significant reduction in the level of COVID-19 infections. Now, the council also lifted the restrictions on working hours, with offices now allowed to open from 8 to 5 p.m. That's all for today's regional top stories. Let's take a moment to look at how the markets are performing. Now, in December 2018, the Rwandan government launched the Ejo Heza, a pension scheme intended to improve the welfare of those vulnerable informal sector workers. How is the scheme getting on 2 years after inception? Dan Riamira, monitoring, evaluation and planning expert at the Rwanda Social Security Board, talked to us earlier.
Whereby less than 7% of the workforce was covered by the state pension and other social security arrangements in the country, and the remaining more than 92% of the workforce was not covered by any pension arrangement. So this was the main reason why the government came up with an idea of creating or establishing a voluntary savings scheme, which is inclusive in the sense that it allows the informal sector and other people to be able to save for their retirement. So these are this is the reason why EJOHESA was established. From 14th December 2018, when it was officially launched, I would say that a lot has been done in terms of onboarding people, whereby by today we are looking so far in the scheme. These 700 members, 500 savers, 500 of them have been able to save in the scheme, and a total of almost 6 billion Rwandan francs has already been saved.
Wow, you know, I think initiatives like this are actually changing the savings culture in the country. It's raising awareness. How do you think that it's affected the way that people think about saving here in Rwanda?
I look at this in two ways. One is how we've been able to monitor the trend from the day it was launched. I would say that in the first half of 2019, we've been able to mobilize 62 million. It doesn't sound like a good progress, but we were just starting out, and we needed to do an intensive awareness around the scheme to make sure that people understand. Given its the voluntary nature, given that it was the first-time initiative, it was indeed imperative for us to ensure that everyone understands what the scheme is all about. So in the first half of 2019, we mobilized 62 million, and 92,000 were already in the scheme. In the second half of 2019, we were able to mobilize 950 million. So that's you can imagine the trend. It showed that people had begun to really understand and respond positively towards enrolling and saving in the scheme. In the first half of 2020, we are looking at almost 3 billion Rwandan francs and 303,000 savers. In the first quarter of the financial year 2020-2021, where we are today, we are looking at more than close to 1.5 billion Rwandan francs. So looking at the trend, you could imagine how people have been able to respond positively, both in terms of those who join and start saving, but also those who are already in the scheme and they manage to persistently save in the scheme. So that's one way. That's one way you can look at how people have been influenced to keep on saving. But also, I would be happy to mention that when you look at the FinScope report, which was the survey which was done in 2016, it showed that 80% of Rwandans were financially included. Just 4 years, there was also a FinScope report, which the recent one showed that 93% of Rwandans are financially included. So that's about 4% increment in a space of 4 years. So we think that EJOHESA and many other government initiatives, which were intended to actually make sure that by the year 2024, we managed to achieve 100% inclusion. So EJOHESA is part of those initiatives, and I think it has again created the awareness about saving, whether for the long term, but also instilling the culture of saving among the population.
Right, Dan. Before I let you go, what measures are you employing, or what strategies are you using able to increase participation in these programs?
There are quite many. I would say that currently, also having in mind that COVID-19 has not been able to permit us to go on with one-on-one mobilization campaigns, we had to refocus our strategy and be able to make use of the media space. So what we are looking at, one of our strategies is that we have to embark on an aggressive awareness through media, through radio and TV talk shows, also having presence in newspapers to ensure that the visibility of Ejoheza is again achieved. That's one strategy. Another one is we plan to work with the private sector and be able to get to the employers and their employees. As I said, initially Ejoheza was established to help the informal sector who did not have an opportunity to save for long term. And by going through the private sector, engaging cooperatives and saving groups, we will be able to have a substantial percentage of what we would want to achieve in as far as the informal sector inclusion is concerned. The other strategy is that we plan to work with the central and local government authorities for them to help us own the scheme, but also help us in promoting it. Ejoheza is also an opportunity for the former employees, those who already have a state pension or who already save with other saving plans. We also want to give Ejoheza people as an opportunity as a supplementary saving scheme.
That was Dan Riyamira, monitoring, evaluation and planning expert at the Rwanda Social Security Board, speaking to CNBC Africa's Makeda Mahadi earlier. Now you're watching Closing Bell East Africa. We'll be right back after this short break.
Rockwell Automation, we believe in a people-centric approach to digital transformation. While technology can certainly connect the dots between organizational challenges and solutions, any successful operation relies on people who drive it.
The buzzword today is all about flexibility and being able to adapt different tools. There's new tooling coming out all the time.
We are working with some of our customers on the social distancing, contact tracing, in terms of workplace itself, how people are using the workplace.
To bring that all together, really, I think COVID has presented a very unique opportunity for public service to sort of, and government specifically, to really look at it and say, look, what do we need to do now? How do we fast track? And how do we also raise our own awareness?
The train is running. I mean, don't miss it. If you are in business, get on with it and join the conversation. There's no way we can turn back on this. So as an organization, as a business leader, you need to get on the digital transformation wagon now.
And together we can try to make the world a better place, utilizing all of these wonderful technologies we have to our resources.
Tune in to see
CNBC Africa for this special ABSA Insight series as industry experts discuss, amongst many topics, commodities, risk appetite, sustainability and climate change. Tune in as Shirley Weber, head coverage of Natural Resources and Energy Group ABSA, unpacks natural resources and energy and the way forward post-COVID-19.
Efficiency is more important now. Cash flow preservation is at the order of the day.
Daily at 11:25 a.m. CAT, only on CNBC Africa.
Welcome back to Closing Bell East Africa. Now, agriculture is the backbone for many of sub-Saharan economies. And despite the COVID-19 pandemic, the impact on the sector has remained relatively stable. But the sector still has some major key challenges. Now, earlier we caught up with Jerome Barbaron, the head of crop protection in Africa and the Middle East at Syngenta, for more on this and access to markets.
The AGRF has been a great success. And everybody has acknowledged that 2020, with all the disruption come from COVID, have created the opportunity for everyone to realize how much agriculture and food production is key to maintain society. I mean, this is a strategic priority for all countries and all people, of course. Hence, you and we have all, across most countries in Africa, a formal recognition that the people working in agriculture, producing food, transporting food, harvesting, had to have derogations and to have a special authorization to go on working. So that's why, in a way, food and agriculture have been a bit protected. But there were some challenges, though. If we keep in mind, like we heard in AGRF, that across Africa, on average, 40 to 50% of the food is imported, of the food we eat every day is imported. The closure of many borders have created many disruptions. So this has not gone without trouble, though.
Right there in that challenge of the imported food is also an opportunity for various African countries, especially with the coming in of the AfCFTA that's set to happen in early next year. But access to markets is still a challenge. Right now, how do we tackle that?
You're right. I mean, this was the hot topic, and this is clear. We need to find a way to really help, and with Syngenta, we are committed to it. We need to find a way to unleash the potential of Africa, the potential of African agriculture. I believe in Syngenta, we can talk about it, right? We have more than 50 years across many countries, more than 28 countries. In Africa, helping farmers find solutions, get the right training, get the right product, innovative technologies, training to increase the yield. And there are ways. But of course, unleashing this potential would mean providing better access to the farmers. In the home country, across the countries in Africa, making sure that the farmers don't pay the price for the borders and the very strict borders and the very costly borders from one country to the next and then the third one. That creates a big burden. To be honest, also providing better access for African farmers to export markets also, to markets outside Africa. This is a big challenge, and we are determined in Syngenta to accompany the governments, to accompany the organization and the farmers to unleash this potential.
Yeah, so talking about access to better markets, there is a belief that at the end of the day, the person who's going to pay the price or feel that pinch is going to be the farmer. And we've seen this happen with an example in the horticulture sector, whereby countries have gone on to have record number of sales in the past 2 months, but that hasn't been reflected to what the farmers are putting in their pockets. Now, how do we sync that value chain?
If the farmers don't benefit, this global transformation and this unleashing of the potential of Africa will not happen. So you're very right. The farmers need to see the benefit. To make sure they see the benefit, all the players, of course, the input providers, and we provide inputs and training, but also the governments and the organization and the value chain. I mean, you mentioned the value chain yourself. You need to partner and work hand in hand to develop the right frameworks to remove the trade barriers that exist between geographies and between markets, and make sure that the farmers can not only harvest more, which we promise and we are determined to help the farmers on, producing more and in a more sustainable way on their farm. That's what we are here for. But they need to see the benefit also in price and value, and that will come with ensuring consistent access to the markets. Because if they have a consistent access to the market, and if the farmers can provide more sustainably and regularly the big cities that flourish across Africa, as we heard last week, they will be able to make predictions and to share the proper investment, to invest in storage facility with neighbors and with communities, and store and sell probably at a better price a bit later on, not at the same time as everyone else. So there's a lot to do, and it will come from the alignment of the incentives of all the players, and we intend to be clearly one of them.
And just with your expertise in that field, we've seen the coming of the locusts at the beginning of the year. That challenge is still there. Increased pests in many of the markets, especially affecting agriculture, is happening. East Africa, to be very specific, and that's all coming from climate change. Now, what could be the long-term solution?
So regarding the locust, and to be honest, if you think of locusts have been around for a while and forever, but what's happening now, 10 years after the biggest invasion, what happened this year in 2020 is a huge challenge. I think we have never seen that. And these pest pressure, which are going to be extremely destructive, will keep increasing more and more. Just because, well, think of the climate change. The climate change has a huge impact. If you look at the acceleration and the frequency, the severity of the droughts or the rains, but the droughts last year, if you think of East Africa or Morocco or South Zambia, last year it's been very visible and more extreme than ever possibly. So these pest infestation that can be a devastation for farmers will multiply. We saw that with locusts this year, as you said. We see that increasingly year after year with the fall armyworm, and to help combat these pests, of course, we come with technologies, with transformative technologies to help the farmers thrive, not only control the risk, but anticipate and fight the risk when it's there, when the pests are effectively there, and make sure that not only in terms of quantity, but also quality, there is a reasonable harvest at the end of the season for the farmers to make a profit. So we are innovating. We are determined to bringing the disruptive and the transformative technologies to the farmer. They need, long story short, what we need to build, because climate change is here for long, we need to build these more resilient food systems and to help farmers develop their resilience. And it will come with the proper support from the communities and the governments, but clearly the access to transformative technologies.
There was Jerome Barbaron, the head of crop protection in Africa and the Middle East at Syngenta, speaking to us earlier. Now, global provider of sustainable agriculture products, UPL Limited, has teamed up with the FIFA Foundation in a new collaboration agreement that aims to promote awareness about sustainable development in agriculture. At first glance, the two do seem to be an unusual pairing, but CNBC Africa's Makeda Mahadio sat down with the global CEO of UPL, Jai Shroff, for details on the recently signed MOU.
We have partnered with FIFA Foundation to really help transform lives of small farmers by bringing technology which can improve the resilience of small farmers. We believe that reward and recognition for farmers can transform their ability to improve the impact and improve the practices in agriculture, which can help conserve soil, conserve water, conserve and really increase productivity. And the idea is FIFA is such a fantastic platform, and we believe together with UPL and FIFA Foundation, we will use Football for Schools as a program and the helping sustainability in agriculture, bring sustainable agriculture practices throughout Africa and other parts of the world using their platform, and bring new revolutionary technology which really helps them to be more resilient to climate change, to be able to reduce the impact of droughts and floods and increase productivity.
Tell us a bit more about this technology that you're investing in.
So UPL is a world leader in technologies for biosolutions, for stress management for agriculture. We are the fifth largest player. We are the largest player in Africa, and we believe that we can reduce the inputs cost, which we've been piloting across, that we will reduce the cost for farmers by 30% and increase productivity by 20%. So actually the farmers can earn almost 50% more once they follow these protocols. And this will be able to transform. Also, we believe that categorizing sustainably grown crops in a separate category will give them increased value.
Right. We've seen that this is supposed to be a 10-year program for this sustainable development. Which countries or which markets will be benefiting the most from this? And are there any other programs that you'll be supporting with this initiative?
We are present in Southern Africa, West Africa, East Africa, North Africa. So the program, we will pilot the program initially in
That was the global CEO of UPL, Jai Shroff, speaking to CNBC Africa's Makeda Mahadio earlier. That's all we have for today's show. My name is Kwizera Arnold. Feel free to tag us on Twitter at CNBC Africa using the hashtag CBA410 or myself at The Real Kwizera to join the conversation. You have been watching Closing Bell East Africa. After the break, it's Closing Bell South Africa.
In challenging times, it is easy to forget what ignited your passion for business. Remember when you were a dreamer, a change maker, a job creator. Recall the promise, the rush, the prospects of success, and the dawn of a brighter tomorrow in the absence of isolation. The new reality of today requires a reboot, a reimagining, and a redirection of ideas. Let's reload opportunities, reimagine growth, renew connections, redirect conversations, regain advantage, revive this economic powerhouse, reignite Gauteng. In us, you have a partner who can open doors, connect you to opportunities, and unlock Gauteng's dynamic possibilities. Remember GGDA.
Welcome back. I'm Rahel Solomon.
sustainability targets, we collect the statistics, but we actually don't do the work that is required to ensure that we empower other women. We create an environment for women to be able to thrive within the corporate environment.
Your procurement programs should be able to focus on women. It is just not enough for women to remain as SMMEs.
The country has done very well. I am testament to that. And the panel that is sitting here with me is also a testament to that.
Women in full inclusion in the workforce will add to the world's GDP $28 trillion a year.
Good afternoon, everyone, and welcome to Closing Bell South Africa, your wrap of the markets day with myself, Fifi Peters. Coming up on the show today, it is a big week for interest rates across the world, from Asia to the UK and even the Americas. We'll discuss inflation expectations as well as interest rate expectations ahead of our very own Reserve Bank interest rate decision later this week. A lot of company updates out earlier, including results that of Bidvest, the industrial group, will join us on the show to review the numbers and also to speak about the future. You can let us know what you think about the show. We always welcome your thoughts. You can tweet us at CNBC Africa using that hashtag CBSA, and you can tweet me at Fifi Peters. Let's get started with a look at some of your top stories. One of the major focus points this week is the central bank meetings. The Reserve Bank will hold its three-day monetary policy meeting from tomorrow. The bank's interest rate decision will be concluded on Thursday. The Reserve Bank has already cut interest rates by 300 basis points this year. And in a Reuters poll, 15 economists predict that the repo rate will remain unchanged, while 10 predict a modest 25 basis point cut. MPC meetings will also be held by the US Federal Reserve, the Bank of Japan, and also the Bank of England. The Bidvest share price is up 5% as the groups reported a 22.5% drop in normalized headline earnings. The company was hit by charges related to COVID-19 amounting to 1.6 billion rand. Net debt surged to 19.2 billion rand, largely due to its acquisition of UK hygiene services group PHS in May. The group has decided to hold on to its dividend. We'll be getting more detail in the show a little later from Lindsay Ralphs, the outgoing CEO at Bidvest. And Harmony Gold's purchase of AngloGold Ashanti's South African assets has gone through. The transaction is scheduled to close on the 30th of September. Harmony will be taking control of Mponeng and Mine Waste Solutions from the 1st of October. South Africa's Mines Ministry approved the sale on the condition that AngloGold Ashanti does not delist from the JSE. All right, those are your major stories at this hour. Let's take a look at what drove markets, and helping us understand exactly what that was today is Nesson Nair, the Senior Portfolio Manager at Sasfin Securities. Nesson, thanks so much for your time. Quite a good start so far, and quite an interesting reaction, I think, from the Rand. If you look at what did happen in Turkey regarding that downgrade, I remember the times when investors used to look at the emerging market complex as a whole, and any bad news from one of the players sends everyone tumbling, and it seems like it wasn't the case this time around. Turkey was dealt with in isolation.
Yes, firstly, I think it's good that, we weren't the center of attention, negative attention because for a long time, I think investors, especially international investors, were focusing on the South African downgrade. COVID-19 came, we got the downgrade from Moody, and now it seems like attention has shifted to Turkey. Remember that South Africa and Turkey compete for a lot of investment flows into emerging markets. These are two of the more liquid emerging markets. So, it's understandable that a lot of investment money goes, to both of them. And of course, with Turkey getting its downgrade now 5 notches below investment grade, a lot worse than us, I think, it's good that we can breathe a sigh of relief. And I think we're seeing, some funds maybe coming out of Turkey and being redirected to the South African market, which is, creating a little bit of positivity and a lot of green on the screen.
Yeah, we'll take it. And of course, providing quite a lot of support for the currency in a week where interest rates will be hot on the discussion tables in a lot of trading rooms, I imagine. But there's a lot of interest rate decisions that are coming out. And I imagine that the general expectation, if we start with what is happening in the West and in Asia, is the fact that, the environment is expected to remain accommodative for a prolonged period of time while we try to get out of the COVID-19 havoc. But is there any other detail that you will be looking out for from what the BOJ says, or the Bank of England, or even the US Fed?
Yeah, I think if you go with consensus, Fifi, the US Fed obviously now dealing with a little bit higher inflation. The inflation number coming out, certainly the month number was quite high, but that was an anomaly. That was because used car prices shot up because of supply issues on new cars. And you can imagine that we're going to have these little spikes and little anomalies that we're going to have to deal with. So I don't anticipate too much that the Fed is going to do. They might provide a little bit of a hawkish bid. That's what some commentators are talking about. They don't expect anything to be done by the Bank of England. It's a unanimous hold, although that people are talking about potentially negative rates down the line. And I think if we're going to see negative rates, it's more than likely we're going to see it. Central bank rates I'm talking about, it's more than likely we're going to see it coming out of the UK. So that's kind of, what's been communicated through the wires, if I can say that. Locally, of course, you said it, consensus is for a hold, although if you take into the GDP figures that we saw recently into consideration, I think this is an opportunity to cut. So, I'm in the minority camp on this one. We'll just have to see, what Governor Kanyako comes up with on Thursday.
Yeah, it will be interesting to see, because I see that the consensus says, okay, a pause right now, and then after a possible cut in November. And I remember the last central bank meeting here in South Africa, Nelson, the Reserve Bank was talking about the fact that we hadn't really seen the full effects of the subsequent interest rate cuts that we have received this year as a result of the economy being under harder lockdowns. And now that things are opening up, or have opened up, I wonder what the governor will say, but we'll have to wonder until Thursday when he actually does say. Let's talk about the corporate updates that have come out today, starting with Bidvest results. The most interesting thing, coming out from those numbers from me was a nice flashback to say, hey, the new CEO is about to start as soon as next month. But before we talk about, how the market is feeling about a change of leadership at this really sensitive time, just your thoughts on how the company performed this time around.
Pumi, Bidvest is a company that, if it stretches its hands out, it'll touch the Atlantic and Indian Oceans. That's what it is in South Africa. It is, SA Inc. If you want a barometer, that's, you don't need to look further than Bidvest. And I think the results were a reflection of that. I think if you leave out, just for the time being, although you can't really leave it out, if you leave out the COVID-19 impairment, the 1.6 billion, they showed a very resilient operating result. Of course, there was inevitably going to be an impairment on Comair. Comair is in business rescue, we know, together with SAA. So it's going to impact Bidvest results. But I think ultimately, Bidvest just shows us what a really class organization they are. They went into this crisis knowing that they'll have to shore up liquidity. They've got 10 billion available. If they don't need that liquidity, they'll be in a position to do acquisitions. And Bidvest has grown over the last 30 or 40 years, primarily through acquisitions. And of course, with Mpumi coming in now, she's been really groomed for this role, and I think it's more than just a token appointment. I think Bidvest really wants to instill this culture of diversity in their business because of who they are and what they are in South Africa. And I think for investors, the share price below 150 is great long-term value.
Yeah. I'm no investor and I'm no analyst, but I have been analyzing the number of companies that go to the UK and, bring back with them a flattering track record. And I'm just interested in how the market is feeling about the latest UK acquisition on the part of Bidvest, especially as we are continuing to read headlines coming out of that country regarding the real possibility of that country leaving the Eurozone come December with no tangible deal.
PHS is a hygiene business, and I think it was a fortuitous deal by Bidvest because hygiene certainly is going to be something on the forefront of many investors together with healthcare in a post-COVID-19 world. I think, with globalization, the awareness of hygiene was probably not at the forefront, but now it's definitely going to be. And so I think it's a great acquisition. Remember, they bought Noonan in Ireland a few years ago and made a success out of it. Bidvest, if you look at Bidcorp as well, has been one of the few South African companies that has been able to expand globally, like SAB did, many years ago, and been quite successful at it. So I think a lot of the companies in South Africa that have struggled with it have been trying to apply a South African model to countries that are very different. And Bidvest and SAB were those that chose to diversify in a way that incorporated the values of the countries that they went into, and that's why I think they've been successful.
Yeah. Not to mention Naspers also implementing that, local first strategy to growing its business. But let's talk chicken. Astral Foods out with its trading update. Profits are going to be a little bit lower, in fact, a lot bit, 25%. So my question when I read that statement is, what have they done with all of that chicken that was supposed to go to restaurants and then now is frozen? I mean, am I being too cynical here?
I think they've got it on ice. It's hard to know what with quick frozen with these quick service restaurants. And remember, Astral provides to the likes of KFC, right? So with all these restaurants having had to close because of the pandemic, it affects the whole supply chain. I was impressed that their profits are only going to be down 25%. I thought they were a much smaller margin business. That couldn't really afford to hold any working capital. But it's a testament to how well they've managed the situation. I think a lot of South African companies have managed the pandemic relatively well. I mean, most of the banks haven't actually shown a loss. Big cuts in profit, sure, but nobody has actually come out with a big loss. We hear a lot about how this 50% contraction in GDP, is going to impact jobs, and it is going to, even at Bidvest, they said so. But not to the extent that I think what we would have thought of. So I'm just wondering, whether we're going to see, further deterioration in results down the line. Maybe it's too early for us to actually gauge the economic fallout of this pandemic.
Right. Interesting question that you raised there. I suppose that you and I have to wait for that further down the line to see the answer to that. Nesson, always a pleasure talking to you. That was Nesson Nair, who is the Senior Portfolio Manager at Sasfin Securities, walking us through the market moves that was today. And of course, mentioning Bidvest, who we will be speaking to a little bit later on in the show. But first, let's take a short break. Stay with us.
It's always been true.
I don't know. I told you.
tu le dises à ta mère.
So put a mask on, or else we'll tell your mom.
The COVID-19 crisis has accelerated the use of technologies and digital transformation. According to research that was conducted by Vodafone, 71% of the firms have made at least one new technology investment. This is in direct response to the pandemic. And earlier on Power Lunch, my colleagues Chris Bishop and Zanati Kuma were joined by William Mzimba, who is the CEO for Vodacom Business. He spoke about the adoption of digital technology. Let's take a look.
It's always been true that, necessity is the mother of all inventions. And as we've seen during these tough times of COVID, people have seen the need for them to disrupt themselves and take advantage of new business models that are premised on leveraging digital technologies in the main. And hence, 71% have been investing in new technologies that they hadn't adopted before. And you would know that you've seen a lot of people that have never used Zoom before adopt Zoom as a way of doing business, and people that have never heard of Teams before, and people and businesses that had never adopted work from home scenarios have adopted such scenarios and deployed new technologies to enable work from home. And the internet has been a new way of, of living, of socializing, and of learning.
And I mean, COVID-19 has accelerated the need for these technologies. More people are working from home. But as much as we do appreciate these opportunities that these are presenting to businesses, what are the threats associated with adopting these technologies, and is cybersecurity matching the pace at which these technologies are being adopted?
Indeed. I mean, I think that if you look at it, one of the key technologies we talk about is cloud, and cloud inherently requires much more heightened levels of securing your endpoint devices as more and more people work away from the corporate networks that inherently have better security than you'll have devices and people working from the remote locations and also from their homes. So we have also seen a high increase in the adoption of cybersecurity technologies, but at the same time we've seen the cybersecurity hackers also becoming a lot more smarter, as you have seen a couple of incidences here, home soil, of a couple of enterprises that have been attacked. But I would like to say that as more and more people believe in the new ways of working, these technologies inherently are also shipping out of the box with improved levels of security. And also, more and more people are getting more accustomed to thinking security first. So as you know, one of the key components of securing your network and ways of work in the digital world, it's a heightened need by the users to be much more aware, because some of the phishing attempts and other activities require a user to activate those pieces of application. So we've also seen a lot of education coming through as part and parcel of helping users to just understand how to live in this digital world, which has been helpful in a way. More than just relying on technologies, we're also starting to rely on the users themselves with their understanding that they play a critical role in preventing attacks, cyber attacks.
Moving on, in line with the conditions of the current economic environment, Bidvest has reported a drop in earnings. The company's results come on the back of Bidvest anticipating tough times ahead. And joining us to unpack the results is Lindsay Ralphs, who is the outgoing CEO of Bidvest. Lindsay, thanks so much for your time. I wish I could have seen you via Zoom or Skype interview as we are doing nowadays, but nonetheless, let's have a conversation. You deliver a valedictory set of results, and judging by the reaction in the share price, the market is giving you a thumbs up for the last set of results that you delivered to its door. And this is quite something to be proud of, given the fact that things are so tough with the pandemic. But I imagine that the period under review wasn't all that easy. Just walk us through some of the most difficult and challenging times that the group had to face under the current period. All right, so it would seem that the line from Bidvest CEO has dropped, and as I say, the company did come out with its results a little bit earlier. In fact, one of the first, very first companies to report on the JSE earlier this morning. These are the last set of numbers that Lindsay Ralphs will be delivering in his capacity as CEO, and he is back and he joins the show. Lindsay, thanks so much for your time. Testing, are you there?
Yeah, I am. Thanks, Cece. I'm here with you.
Perfect. So I was talking about your numbers that you are delivering, or that you did deliver today, and these are your valedictory results that were delivered in quite unprecedented times. The share price reaction is saying that the market is giving you a thumbs up for being able to navigate what was quite a difficult period. I imagine it wasn't all that easy, though, and I'd like to understand what the most challenging times throughout the period under review was for the current leadership.
Thanks, Fifi. I think, very difficult times to publish my last set of results. For this, I have been there for 28 years. I guess there were two aspects to this financial year. The first thing was pre-COVID. You'll remember that SA Inc. Was in technical recession. Things were not very good, and we were heading for junk status and a Moody's downgrade. That all happened as COVID hit us. So it really was a situation that we needed to very serious look at what are the potential implications of this. And I guess, and you'll see in our highlight presentation of our results, we saw liquidity and preservation of cash as absolutely vital. And the second most important thing, Fifi, was to look after our staff. We employ 125,000 people approximately, and they were absolutely vital to us to look after them and nurture them through this very difficult time. So it was really two issues. One, look after the balance sheet and the cash, and secondly, look after the staff.
But of course, you weren't able to look after all staff members, or you won't be able to even as we go ahead. You have highlighted retrenchments coming up in your statement. How many are we looking at here, and where will the jobs be cut?
We don't have an exact number of people. Bidvest has a very good reputation of growing employment within South Africa, and that's how we've got up to the 125,000 people. That's either organically or by acquisition, and we'll continue to do that. We've got lots of plans for further growth. Our LPG facility comes online this month. We've got various other openings of businesses that we have in the pipeline. And unfortunately, a couple of our businesses have been identified, two of them specifically. Our car rental business, Bidvest Car Rental, we're going to dispose of that, and Bidvest Services at the airport. Both of those businesses obviously severely impacted by the aviation sector, the travel sector, and the hospitality sector, which is really going through tough times. So we are going to attempt to dispose of those two businesses, which should retain jobs as much as possible, but there will be some retrenchments, unfortunately. And then across all aspects of our business, we continue to right-size. We've been right-sizing for the last 10 years, and I guess we'll be right-sizing it for the next 10 to 15 to 20 years. So, times are difficult. We have seen, I must just say that we have seen most of our businesses coming back quite strongly as we've entered into level 2 lockdown, and hopefully we're going to go into level 1 fairly shortly. So we will attempt to limit retrenchments as much as possible, but there will be some, there's just no doubt about it.
Sure, sure. And Lindsay, of course, as you did say, last set of results, and you'll be handing over to Mpumi at the end of the month. You have, and the current leadership has set the bar quite high in terms of how and what the company is able to do in difficult times. I imagine that 18 months ago, when the company did make the announcements that she would be taking over, few things perhaps were a lot different by way of strategy and you know, where the group wanted to go and how it wanted to conduct its business. I'm quite interested in what shareholders should expect from Bidvest going forward under the leadership of Mpumi Madisa, and you know, where the tweaks and the changes to your strategy have taken place. You mentioned the 2 businesses that you had divested from, but I'm thinking, is there any more?
No, I think we're comfortable now that all the businesses that we have, there are 6 major divisions. We're very comfortable with those divisions. We have recently acquired a significant hygiene business overseas called PHS. We would continue with our 6 operations in South Africa. They all are very significant size. So we'll do bolt-on acquisitions to those companies in South Africa. But I think quite a big area of strategic further acquisitive growth will be offshore, simply because we already are fairly large in the business in which we operate in South Africa.
And just on the outlook of PHS and what you foresee potentially the major opportunities and headwinds for that business being, and I'm just looking at it from the news that I'm reading from the UK economy about how business is quite uncertain about where that economy is headed, because the talks that have started this year with the European Union about, you know, an agreeable deal for both parties don't seem to be materializing, and there's a real possibility that they won't materialize come the deadline in December. So what is your outlook with that? And if we get the worst case Brexit scenario, what does that do to the outlook for this company? What does that do to your debt that has spiraled as a result of this acquisition?
Let me just start with the debt. So the debt did go up. We had the funding in place long before COVID. We signed this transaction in December last year. The debt was secured well before that at very, very attractive interest rates. So we're very comfortable with the debt. Our total debt level is only 2 times EBITDA, which is not high at all and well within our covenants. So we're comfortable with the debt levels. The business is a very strategic and important business in any economy at any point in time. I think the COVID pandemic has heightened the importance of personal hygiene and washing hands, etc., etc. So we are actually quite excited about the fact that we've acquired this particular business at this particular point in time. Brexit was a known risk to us pre-COVID. We had taken into account, and it's quite interesting that we had been looking at PHS for about 3 or 4 years, and they put in a bid some time back. With Brexit on the horizon, we actually reduced the price by a couple £100 million because of that risk. We're not really concerned about it in that I think people are very, very, very aware of the fact that hygiene has become so important. And notwithstanding what happens in the UK, people still need to wash their hands and sanitize, etc. So I think it's actually been a very fortuitous acquisition, and it's going to be a great opportunity.
All right. And I hope that as people, we don't drop our standards on hygiene when a cure comes to market. I hear that the guys are making headways there, but a conversation for another day. Lindsay, this is the last time I'm speaking to you in your capacity to speak on behalf of the company. And I'd like to ask you to walk down memory lane for just a bit and walk through, you know, some of your major highlights and lowlights of being part of the company for the last 28 years.
Yeah, you know, I actually started with Brian Joffe before Bidvest was actually created. Worked with him there for about 5 years and then came across you and obviously started Bidvest. Probably my highlight was that one of the first tasks I was given was to start a company called BidServe, which is today our Bidvest Services division. And that has, as it turns out, become the largest and most successful division within Bidvest, together with our Noonan acquisitions, our PHS acquisitions. So that has always been a big thrust of what I've done within Bidvest, and it's really nice now that I'm exiting that division has performed and succeeded so well over so many years. We haven't had many lowlights. I think, when we unbundled and sold off the food business that did re-engineer, rejuvenate Bidvest into something and morph it into something very different. We lost a lot of friends in that. Not in a personal way. We're still friends personally, but we lost a lot of business colleagues because the business was unbundled, so it was cut in half. And Bernard Berson and his team went their merry way. We did miss them, and I got lovely congratulatory messages from Bernard today and his team. But generally, we've only had highlights, quite honestly. But it's been a huge success at Brown started 30 years ago, and I've enjoyed every minute of it.
And where to next from here? And I ask this question purposefully because, yes, you've reached retirement age, but I've seen many CEOs reach retirement age and resign and then, pop up elsewhere. So where should we expect to see you?
I definitely don't have anything firm or anything on the horizon. I'm not going to any other job or anything like that. I don't see myself, Fifi, as a classic non-exec director who's going to sit on all of the boards. It's just not my style. So I'm sure I will end up investing in various projects and various different entities. I think, part of being part of the Bidvest family has been to manage. I think we've got something like 300 companies within Bidvest. So I'd love to still be involved in managing businesses that managers and inspire managers to manage for themselves. So I think it'll be something along those lines.
Well, hint there. Thank you for it. We'll be looking out for that. Lindsay, thanks so much for your time and best of luck for the future. Lindsay Ralphs, the outgoing CEO of Bidvest, they're walking through the group's numbers. And that is where we leave it for Closing Bell South Africa today. Thank you for watching. As always, have yourselves a great evening and I'll see you again tomorrow. Goodbye. The government faces two challenges: dealing with the health crisis and rebooting the economy. The strategic focus for Gauteng is currently on smart mobility as an enabler. What can be done to rebuild the trust between public transport operators and passengers?
Given that the virus itself cannot spread on its own, it needs humans to move it from one place to another. And because public transport is often in a confined space, it really presents many challenges.
Probably about 20% of our passengers don't have access to cars. Is that every single one of them has obeyed the directives that have been given. They've worn masks, they've sanitized, they've maintained very good social distancing on this. And for us, it's been about being able to accommodate the numbers and be sure that however many people arrive, we can transport them as safely as possible.
As a regulator, as part of the support we're giving to operators in this instance, we've been assessing their safety plans, and we are obviously putting a key focus on ensuring that there is safety and security of their assets, primarily, but also the safety of the passengers.
Crisis, volatility, relief efforts, economic impact. Understand what's moving and why. Squawk on the Street on CNBC.
Hello and welcome to Beyond Markets, where we bring you up to speed on development outcomes in Africa. I'm Kenneth Bowman. Thank you so much for joining me on the show. Today, we'll discuss the opportunities in the COVID-19 new normal and also the role of the diaspora community in building back the Africa's economy post-COVID-19. Join the conversation on social media. Let us know what you think. The hashtag to use is Beyond Markets. You can also hit me up on my handle. That's @Kenneth Igbomo. Now, the COVID-19 pandemic has been a major disruptor to everyday life as we know it. As economies reopen, Akin Banuso, the country general manager for Microsoft Nigeria, joins me now to explore the opportunities in the new normal. Thank you so much for your time on the show, Akin. And for Microsoft, though, what has been that impact?
Thank you for having me on the show. For Microsoft, the impact of COVID-19 has been just as severe as with everyone else globally. We've seen, as my CEO would say, we've seen about 2 years worth of digital transformation in 2 months during this pandemic, i.e. the adoption of remote working, the adoption of digital transformation practices in being injected into everyday life. So even yesterday, I didn't have to go see a doctor. I was able to do telemedicine diagnosis and then have medicine delivered to me. So yes, the impact has been significant.
All right, but I'd like you to speak to some of the lessons that you learned during the lockdown period, especially how models will be changing for the world going forward.
So what we see is, as I say, a rapid increment and move towards digitization. So the global economy was already on the path to becoming a digital economy, but now you can see that even in Nigeria and the rest of Africa, the digital economy has become even more indispensable. And one of the things that we see happening is it's in every facet of life. If we just speak to sort of the government by itself, you can see in areas such as public safety and justice, there is a need now to be able to swiftly deliver those services. So as they say, justice delayed could be justice denied. So recently you saw the Attorney General of the Federation and the Ministers of Justice talking about allowing remote court hearings via teleconference. We've run a few trials with a few state governments and the federal government. We continue to work with them. If you think about health and human services, it's the same thing. These are critical services. If you think about finance, just think about your bank. There is now a reluctance to go into a banking hall and queue up and be in a crowd of people if you don't have to. That is already driving the desire and the need for people to start adopting digital channels of transacting their businesses. And the fast movers in the industry and in the market are able to offer you all of the services you need, either online or via your mobile.
All right, but when you look at the increased uptake of digitalization, especially in Africa, there's challenges that we see here. Sometimes we're seeing capacity issues play out also on the infrastructure space. But how do you think Africa can catch up and make this an opportunity?
This is a very good question, and this is something that we see a lot of. The good thing is that it's generally recognized by ourselves in the private sector and the governments in the public sector as well. You will see that we have been working very closely with the Ministry of Comms, Tech and Digital Economy in Nigeria, for example. They are working with their National Communications Commission, working with the providers to increase bandwidth. You can see all of the telco providers working really hard to sort of increase penetration. One of the basic requirements that like what you mentioned is to have the basic infrastructure. One of the things that we started to do around about 4 years ago was promoting the use of Airband. Airband is a technology that makes use of the unutilized TV white space that we have in the country and across. And we've actually already deployed a solution in Kenya, and we're working with the NCC in Nigeria now and also in Ghana with our partners to donate the equipment so that they can actually take broadband into the rural areas. And that will, because if you think about it, as the mobile providers, sometimes it's not profitable, commercially viable for them to take broadband to an area that only has, a community that cannot afford or is very low penetration. And for us, it's important for the government and for the community to have that infrastructure so that we can then layer on top of that the key services. And that's already in play. And you can also see public-private partnerships in the likes of Lagos State, where the state government announced this broadband initiative, and it's actually now going around laying its own cable so that you can have last-mile connectivity that is more reliable to businesses and individuals.
Looking at how businesses can adjust to this new normal, there's been a lot of talk about how companies can leapfrog, especially with the opportunity that this brings. But for companies who have invested in infrastructure or invested in equipment and all of that, it is more or less opportunity meeting the prepared.
If a company has already made investment in equipment, if I go back to my old school days, there was this thing called Moore's Law, which spoke about the rate at which computer processors increased in power, sort of roughly every 18 months, and sort of halved in cost. And that has gone wildly further. So what you have is a cycle where, most equipment that you purchase, the average life cycle that the accountants will write them down is between 3 and 5 years. So let's say 5 years. If you purchased equipment as a large company, you would be able to sweat the assets for a 5-year period. And by the end of the 5 years, between 3 years and 5 years, the equipment becomes obsolete because technology is moving so fast. So today, we are able to do amazing things with, for example, our HoloLens, and we're able to do machine learning that enables us to do artificial intelligence and really do a lot of real advanced analytics. Those kind of computations that are moving the human race forward. You and I as individuals would not, even the largest companies that we have here, it wouldn't make sense to try and acquire the equipment and own them. And this is where the public cloud, the cloud comes into play. So in most universities, and I'll give you a very good example, in most universities in Africa today, most of those universities do not have proper research labs. They don't have the capacity to run deep research. And that's because the cost of acquiring the equipment would be prohibitive. Let's not even talk about the power requirements, the cooling requirements, the maintenance, but today with the advent of the cloud that you mentioned, there's the ability to leapfrog and not have a need to acquire so much. What you now need is the human capacity to train the people and then access, and then you'll be able to rent the time on the processing, the time on the specialized equipment when you need to run your simulations. And that is a huge opportunity given to businesses as well as research institutes as well as students in this new age that we've come into in the fourth industrial revolution.
All right, because then when you look at all of this, man, just like we're looking at the opportunities, we also understand that it also brings up some new challenges, but then the winners will be people who can come up with solutions to deal with some of the challenges. And one of the challenges that I would like to look at here is the issues around identity theft and identity management, because the fact that we're going to be dealing with each other remotely means that, we have to, the integrity of the information that we share and data will also should be protected. But I'd like you to speak to some of the solutions we can see in this space.
Yeah. This is an absolutely critical factor. The more we work remotely, the more you now have to focus on the integrity of identity and access management. So the first thing that we always state is we try to ensure that you validate the identity of the user at the beginning, and you keep validating at different stages. And then you give that person a token to access what they need to access. Some of the solutions that we have that even as a consumer anyone can use, for example, apart from would be if you think about when you go to your bank, you would be asked, you'd be probably given a hardware token to be able to log on onto your bank account. And that's a two-factor authentication method where you're given a password and then you're given a token. And with the combination of your password and that token, which is automatically regenerated every 5 seconds or so, it limits the chance that someone who has access to your password can also then randomly generate the code that will be generated. One of the things that we've done is we have an authenticator app that you can install on your mobile phone, which mimics that, which if it's integrated into your system, enables you to generate a unique code or a token to secure your system. That's one solution that we have. We also have Windows Hello, for example, which uses facial recognition. So I log into my PC now. I cannot remember my passwords because I have so many different passwords. I log in either via my facial recognition because everyone's facial face print is unique, or I use my fingerprints, right? So they're biometrics. So in today's age, in the day and age that we're in now, passwords themselves, because they become so complex, what you find is that people tend to try and write them down. So you need to ensure that you have multi-factor authentication, which enables you to verify people's identity via different means. And I mentioned just about three methods that we have there. Windows Hello, for example, uses your face or biometrics. Authenticator app, which generates a unique token every few seconds that no one can hack, So, and it's very important that people take this seriously. Also, one thing I want to mention about security, the thing about security that a lot of people don't take cognizance of is that the most obvious things usually tend to be what lets us down. People tend to use very simple passwords, people's birthdays, favorite holidays, children's names, and obviously there's also a lot of social engineering going on. So people share a lot of information on social media, which can be used to guess, challenge questions. And this again is a very obvious method that people need to be aware of. So because at the end of the day, we are human beings, and this is what happens. So you can still socially engineer by getting at those information.
All right, then. Thank you so much for your time. Definitely quite a lot to think about on the amount of opportunity that we can see in this space that COVID-19 presents in this new normal. I've been speaking to Akin Banuso. He's the country general manager for Microsoft Nigeria. After the break, we'll is the country general manager for Microsoft Nigeria. After the break, we'll find out how the diaspora community can help African countries recover from the COVID-19 pandemic and build resilience against future shocks.
It takes less than a minute to wear a mask, and even less to catch the COVID-19 virus. We are witnessing a surge in COVID-19 cases, with many lives being affected by a virus that has no respect for age, race, gender, religion, or status. But you can help stop the spread. Wear a mask, wash your hands always, and maintain social distancing. It just might be saving a life. My name is Abdul Samad Rabiu. Wear a mask, save lives.
Green chemistry is saving red, white and rosé.
We are pressurizing CO2 to go inside the cork structure and extract the volatile compounds from the cork.
Green solutions turning electronic waste into a golden opportunity.
These are the microbes that have gone into solution and plucked out a particular metal that we want.
Can nature make chemistry more sustainable?
Nature is our greatest design teacher.
Chemistry going green on the next Sustainable Energy.
Welcome back to Beyond Markets. Now, as the world continues to grapple with the impact of the COVID-19 pandemic, Almaz Negash, the founder and executive director of the African Diaspora Network, says she foresees acceleration in areas like connectivity, finance, education, and healthcare. She joined me to explore the role of the diaspora community in Africa's resurgence from the COVID-19 pandemic shock. I'd like to get your take on how Africa has responded to this pandemic so far.
Well, I think from where I am, first of all, thank you for having me. From where I am in the United States, specifically in California, I hear some countries are doing well, some countries are not. But I think at the beginning, Africa really took this seriously, and many countries really tried to curtail it. South Africa is doing pretty well in terms of really having had pretty high number of infection, and now I think it's at the leveling down. The challenge with the continent is not just how many countries have it. I think it's the shutdown of the economy that I worry, and that we all worry as a diaspora, and I'm sure it's even harder for the lives and livelihoods of many people in the continent. We are not made to be separated from each other. So I see that as a challenge, but I can tell you, given the enormity of the challenge, the continent is doing as good as it can in terms of really managing it. But the question for us is always the economy. And so I'm proud of what is happening, but at the same time, it's not equal. We have 54 countries, and not every country is doing it the same way.
All right, definitely quite a lot of impact we're seeing across board here from what we said, but definitely the lockdowns over the months have impacted the pockets of countries across the world. But from where you sit as someone who deals with the diaspora community, I'd like to know how much this has impacted the diaspora community's support structure and also their arsenal to come together to donate funds for the continent at this time.
Well, I think one of the biggest challenge, which is very unfortunate, but that's just the reality of Africa being really much beneficiary of remittances. The diaspora gives more than $40 billion, sends more than $40 billion in remittance to the continent. The majority receiver being Nigeria, which makes sense. It's also the largest country. So Nigeria, being one of the largest countries in the continent, receives also the most in remittances. One of the challenges remittances has been since COVID, it's going down. And the reason it is because a lot of the diasporans who send money back to their home country, to their families and friends, they also don't have jobs. If you know, in the United States, unemployment is high. A lot of the jobs that hire many people, immigrants and non-immigrants, is also slow, starting from transportation to hospitality to many different sectors. So that, I think, is a big impact. The question always is, what are we going to do to mitigate that challenge? Because it's not just about what the continent receives as a whole, but it's also the very family that get that funding. And more on the side of, and I've always advocated, remittances alone is not enough. We need to figure out how to convert some part of the remittance into investment so that families don't have to always be dependent on individuals sending money to them. We need to figure out how to really create a sustainable economy, not only for the continent, but also for the individuals.
When you look at the collaborations that we're seeing taking place across board, I'd like you to speak to the importance of having that very coordinated diaspora response coming together.
Well, every African country is different in the way in which it deals with diaspora, but I can give you some examples of coordinated response. For example, Nigeria has a very good program that is integrated plan for diaspora engagement. Ethiopia has the same one. I believe Kenya, South Africa, Ghana. What that means is also other countries, but I think these come to the top to me. What that means is having an intentional and well-coordinated relationship with your diaspora. It actually enables you to mitigate this kind of challenge when there is an economic turn. The other big thing about the diaspora is our economic, not only about financial support to the countries where we come from, or to other countries for that matter. It's also our ability to provide access to resources besides money. It could be knowledge, money. I'm sorry that Tersal is not here with us, but at the last week meeting that we had here, we had him speak, and one of the things he really encouraged the diaspora to do is to really have an individual with capacity to provide direct health services to the continent through telemedicine, or encourage to aid healthcare workforce in Africa. I think there are so many specific things that the diaspora can do. And then the other thing is really, given the challenge we have with COVID right now, one of his call to action was a diagnostic accelerator, and this would require funding. The initiatives will happen across Africa, different parts of Africa, because they need different kind of support. Is looking at really working on the infrastructure for distribution of medical resources. This could be done by diasporans who have that expertise, or may even have the resources. He also said something that stuck with me. What he told us during the conference was, Africa is not lacking money, we're lacking human capital, the knowledge. And what he's asking is, could some of the diasporans who are capable to come back to the continent in whichever country that they are able to support and to help with this scaling of production, especially of COVID. Once the vaccination is coming, how do you distribute it equally and equitably throughout the continent? So there are so many different things that the diaspora can do. But if you want to look at it from where we are today, related to COVID, I think there's a role for the diaspora to play. I also want to say one thing related to this. There are very many Africans, well-educated doctors in the outside of the continent than in the continent. So there's an opportunity for each country and collectively to tap into that knowledge and expertise.
All right, there's definitely quite a lot when you talk about the role of the diaspora community. But I'd also like you to speak on remittances. You know, we know African countries over the years have come to depend on remittances, you know, and for their economies. But I would like you to speak, to get from you, the kind of feedback you are getting on remittance flow.
So one of the things I even mentioned earlier, and I'm happy to talk about that. So remittances are good. They do good to the individual families who receive the money. I mean, if you really think about many different countries, the small and the medium-sized countries, including the large countries like Nigeria, they benefit from remittances. When we talk about individual families whose kids are overseas and are sending money, that's actually a livelihood for that family. The question is not about whether the diaspora will continue to send or not send remittances to their families and friends. I think the question I would like to continue to speak about is, what are we going to do to scale remittances instead of just sending the family alone, which will be, which is creating in some ways dependency. Why I say that is, when I don't have a job, if I don't have a job and I have a big family that depends on me, what happens to them? It's what we are seeing right now. It's going to be decreased. I may not be able to give that money. That family would actually be crippled. That we need to think about. What are we going to do? There are studies about this. Is South Africa the only continent that gets remittances? Many immigrants send remittances to their own home country and families. I think the question that we need, that we the diaspora continue to discuss about, is how can we scale remittances? In fact, today I do have, I will be participating at a conference put together by my wonderful Nigerian friend, Thelma Ikior. I'm going to just shout out for her, talk exactly about what you're talking about. How can we use the diaspora money to create an impact investment fund for women entrepreneurs, not only in Nigeria, but across Africa? So I think those are the kind of things that we need to talk about. And I do believe the African Union is already, it had an RFP, a request for proposal to create a remittances fund, but mainly an impact fund or a venture fund that could be above and beyond just remittances. For the money that we send, we also save a little bit of money. So the idea is, can we tap into the savings of the diaspora to make a certain amount of that money, whether it's 10% or 15% or even 5%, to go into investment? We need to think long term. First of all, we need to think post-COVID, because COVID will go, but there are many, many people and many livelihoods being impacted negatively. How are we going to deal with that? And that, I think, is urgency, in my opinion, which is why I woke up early to speak with you, and I will be going back after this one to speak to my friends with Thelma. Also, Lagos time, I believe, is 6 a.m. my time. And these are important issues that we need to address. We need to put our money where it's necessary. We need to support and find different ways to support communities in Africa. It cannot be just remittances. Remittances is good, but it's not enough, in my opinion.
All right, definitely quite a lot to look out for, definitely, but then we'll be in touch to get more on what is playing out for the diaspora community and how they can be of help as the continent continues to grapple with the COVID-19 pandemic. Thank you so much for your time on the show today.
Thank you for having me.
I've been speaking to Almaz Negash. She's the founder and executive director of the Africa Diaspora Network. And that's it on Beyond Markets for today. And thank you so much for being a part of the show. Definitely, you can catch the show at 5 p.m. West Africa time daily and have access to all episodes of Beyond Markets on our website. That's at cnbcafrica.com. For me and the team, enjoy the rest of your day.
In challenging times, it is easy to forget what ignited your passion for business. Remember when you were a dreamer, a change maker, a job creator. Recall the promise, the rush, the prospects of success, and the dawn of a brighter tomorrow in the absence of isolation. The new reality of today requires a reboot, a reimagining, and a redirection of ideas. Let's reload opportunities, reimagine growth, renew connections, redirect conversations, regain advantage, Revive this economic powerhouse. Reignite Gauteng. In us, you have a partner who can open doors, connect you to opportunities, and unlock Gauteng's dynamic possibilities. Remember GGDA.
From a tourism sector perspective, we have consolidated, put together with the industry and the sector what we deemed as a recovery plan for the province. If one considers the contribution of tourism in the province from a GDP perspective, you're talking about 18%, which translates to about 67 billion, seriously affected. One of the things that we have been acutely aware about it is that we need to have to box cleverly in this. So it's a smart marketing messaging, encouraging supportive messages to the general public so that people do not forget about the wonderful offerings that the province has to offer. So we've been planting messages in all the social media platforms so that people are able to keep in mind about the hidden treasures and the jewel that the Eastern Cape has to offer.
Las Vegas. We've made it our call of the day. John, what do you do with this?
Me, Scott? Did you say John?
Yeah.
Oh, Scott, I think it's an interesting play to downgrade them here and now. It hasn't exactly had outstanding performance, obviously, because of what's happened with the limited access to bringing more folks on. But I think the deal focus over on Caesars, if people are forgetting about MGM, is mistaken. I think MGM is still a significant player in the space, good exposure all over the globe, including online. So I wouldn't exactly throw this one out at this level, Scott. Kind of the opposite of some of that superheating that we talked about in other sectors.
Yeah.
This one's been flat on its back for most of the last 3 months.
Part of the problem,
or 6 months.
I'm sorry, Doc. I thought you were finished.
No
I apologize.
Mm-hmm.
Joe, part of the problem is the pizzazz, if you will, is elsewhere, right? Contessa comes on. She talks about Caesars. Caesars making a nice move. You got Penn National, the deal with Barstool, DraftKings. What about here? Do you still own Penn or no?
I got out of Penn way too soon, and I am going to completely disagree with my good friend John Najarian. I would not buy MGM here. I think they are in the wrong destinations here domestically. New Jersey, New York, Massachusetts, you know the states that they're in. In addition to that, what's very important is some form of a digital presence. MGM, their digital presence, they only own 15% of it. So yes, Penn National is the correct way to approach this right now. They'll be launching the online betting app soon. They don't have, they're not hamstrung by these destinations that are in the wrong place. And clearly they have a distinctive marketing advantage. Just look at what was just announced with DraftKings and ESPN and Caesars. Why is that? They're going after the content relationship that Barstool has currently with Penn National. And say what you want, Dave Portnoy and Barstool has done an incredibly compelling job gaining momentum in content, and now they're going to be delivered on terms of online betting in a way that's very advantageous for those that will be using it.
That's why, Jim, as you make the argument that, you know, it's a binary deal. You need a vaccine for the casino trade to work. That's not necessarily true. And the performance of some of these other stocks would suggest that you don't. You just need to be in the right areas of the marketplace and have a big enough presence, as Joe just said, and I think he's 1,000% right, in digital. The companies that do, the partnerships that they're making, and the ones that they will continue to make are the stories that are going to continue to stand out.
Yeah, I think that's a valid point, Scott. So let me elaborate on what I was saying. When I'm looking at these gaming stocks,
that maybe don't have as much of a digital presence, as much as these content partnerships that we're talking about, and are more reliant on hotel occupancy, say on the Strip, those are the ones I'm talking about that really need a vaccine. And on those ones, more to the point, you know, you've had them rally on the talk of a vaccine coming. Those might be the classic sell the news once you get them. But let me be clear, the point you're making and that Joe's making, I agree with. These ones that have online betting behind them and don't require as much physical presence, those ones are going to work out fine.
Yeah. We have a number of other interesting calls today. Rahel is with us, as usual, to go through some of those. Hey, Rahel.
Hi, Scott. Yeah, and it's quite a mixed bag today. So let's start with Morgan Stanley initiating coverage of Thermo Fisher with an overweight rating. Price target goes to $485. So the analysts expect continued market share gains in biopharma, especially emerging markets in Asia. Consider this, Scott. So Tmall's revenue in China jumped from $400 million in 2010 to nearly $3 billion in 2019. The stock's also had a nice run this year, up about 35%. You can see it's up about 1.5% right now. We also know that video games have been really hot this year, and Jefferies is upgrading GameStop to buy from hold. Price target increases $1 to $8. The note points out that with the new PlayStation and Xbox being released this year, that should give GameStop at least a strong 12 months. And finally, Needham is initiating coverage of Overstock with a buy rating. Price target goes to $96. This is on continued strength in the home category and also a new management team. The stock has seen a sharp turnaround, Scott, up 2,100% in the last 6 months. And for context, on January 1st, its market cap was $278 million. Today, it's more like $3 billion, Scott.
Wow. That's unbelievable. Rahel, thank you. Rahel Solomon there. Jim, you own Thermo.
Boy, this stock's making me happy, Scott. And it's a relatively recent purchase, about 2 months ago. It's a very simple story that's coming to fruition. As you're doing more testing for COVID-19, as you're doing more drug development, and not just because of the pandemic, but also because of aging demographics, that places revenue demand for Thermo Fisher's products, which are reagents, chemicals, laboratory equipment, and it's global. Look, it's a company that is well managed and in the sweet spot of this crisis. I kind of hate to sound mercenary, but it is.
Yeah. Yeah, no, I hear you. Appreciate that. All right, more trades ahead on the half, including the big ETFs to watch today. And guess what? Delivering Alpha is back. Our 10th anniversary year, September 30th. Our guests right now, including Steven Schwarzman, Carla Harris, Chamath Palihapitiya, many more. We're still adding to that list as well. You can visit deliveringalpha.com to learn more and register. We're back right after this.
What's similar with any crisis is the level of uncertainty. We've got, in effect, 3 crises at the same time. We've got an economic crisis, we've got a health crisis, and we've got a social injustice crisis, all of which have an impact not just on corporations, but also on people. The pandemic has accelerated and scaled all our execution of our campaigns significantly. We used to be 95% working on site with our clients, side by side, and now, of course, 95% of the work is done remotely through video conferences and other digital platforms. The demand of our content has just exploded. The traffic onto McKinsey.com has grown by 30–40%, and we've got, at the moment, a run rate of roughly 100 million users on an annual basis. We also see that when they come on McKinsey.com, they download the content to self-serve themselves.
Oil stock levels are gradually declining. But they're still well above the pre-COVID levels, and we're expecting them to remain well above the pre-COVID levels into 2021. So OPEC Plus have got a delicate maneuvering act here, and it really is all about the demand. If the demand doesn't come back, how long is OPEC Plus going to be able to sustain cohesion?
Keep up with the crisis. Squawk on the Street on CNBC.
Welcome back. Let's get to Frank Holland. He has our ETF Edge today. Hey, Frank.
Hey there, Scott. Big M&A action driving the tech space higher today between Oracle's TikTok bid and NVIDIA's acquisition of SoftBank's ARM. That's all powering the growth trade, at least for the moment. But over the past month, we've seen stronger inflows into value ETFs, with more than $1 billion worth of outflows from growth funds like the Vanguard Growth ETF, that's the VUG. So is the value trade actually broken? Joining me now to discuss are Todd Rosenbluth, Senior Director of ETF and Mutual Fund Investing at CFRA, and Steve Grasso from Stewart Frankel. Looks like we're having some technical difficulties right off the bat. Steve, we're going to toss things over to you. Startling number right there, or shocking number. More than $1 billion have flowed from growth into value over the past month. Is that trade broken? Is the value versus growth trade actually broken, or should I say value ETFs broken?
No, I don't think so, Frank. And I think people have been waiting for this to transpire, and those names that suck up all the oxygen in the room have been those tech names. But the truth is, we're starting to see that paradigm shift now into value names, as you just said. Think about what's happened in the last month or so. You've had Apple, Tesla. Both of those splits have made people rush in, and they've done nothing, zero, for shareholder value. So today you get the NVIDIA news, and it starts up again. All the algorithms rush in and buy anything tech-related. And the same thing is going to happen. You'll see this wear off in the next couple of days or so. The major question, Frank, you have to ask yourself, with Tesla up 386% year-to-date and NVIDIA up 120% year-to-date, where is the next 30 to 50% to the upside coming from? Is it going to come from those names? Or is it going to come from the names on the value side of the spectrum that are down 30 to 50%? As of late, and this year in particular, waiting on the economy to restart.
Steve, great insight there. Todd, we're going to toss things over to you. Hopefully your technical problems have been resolved. Where does CFRA stand on growth versus value ETFs? Are there any macro factors that are leading you in that direction?
We think that growth is going to outperform as we head into the election. You know, interest rates are likely to stay low. We need interest rates to climb higher for value strategies to do well. We like ETFs like IVW, the iShares S&P 500 ETF, VUG, the Vanguard Growth ETF. We think those are going to outperform the value ones as we move forward.
All right, Todd, thank you for that insight. We're going to have to cut it off right there. For more ETF Edge, just sit tight. We go live at 1 p.m. Eastern time on etfedge.cnbc.com with Luke Oliver of DWS Group to talk the bull case for China and the meteoric rise of ESG. You do not want to miss that one, Scott. Back over to you.
All right, we won't. Frank Holland, thanks so much. John Najarian is back. Coming up, unusual activity. We'll get his latest trades when we come back in just 30 seconds.
Green chemistry is saving red, white, and rosé.
We are pressurizing CO2 to go inside the cork structure and extract the volatilized compounds from the cork.
Green solutions turning electronic waste into a golden opportunity.
These are the microbes that have gone into solution and plucked out a particular metal that we want.
Can nature make chemistry more sustainable?
Nature is our greatest design teacher.
Chemistry going green on the next Sustainable Energy.
We are flying to 45 countries. There are no two countries of those 45 that would be imposing the same measures. So it is totally unpredictable. It has become quite a zoo, very difficult to kind of cut through this jungle. So we need orchestration, we need coordination, we need to align standards, we need to align measures. We don't know a single case globally that someone would have been infected by flying. So flying is a very safe activity.
Squawk Alley, breaking the cycle. What companies are doing now to diversify and bridge the divide.
Then is anything going to change?
Corporate Insight, Smart Solutions, Squawk Alley.
confirmed that there is video of one of their trucks, and in the Hindenburg research report, they say, look, this truck wasn't self-powered. It was being rolled down a hill. Nikola basically came out and said, true, that video was not a truck that was self-powered, but that was not part of the sales pitch. That was merely a video of the vision of this company of developing these semi-trucks. So they essentially confirmed one of the complaints from Hindenburg Research, but they then go on to say, that's not the truck that we're building, and we never said that it was self-powered.
You surprised at all, Phil, that Mary Barra came out today and basically said we have their back, so to speak?
I'm not
so to speak?
Scott, I'm not, because I've talked with some people who are intimately familiar with General Motors and the due diligence that they did. They believe that Nikola does give them some real opportunities here, and that the work that Nikola is doing is legitimate. Now, does that mean that Nikola is going to be a home run, that it's going to be as huge as Tesla? No, nobody knows that at this point, but they believe that Nikola is a deal that they can work with, that they can grow with, and they certainly don't believe that this was a case of Trevor Milton and the people at Nikola pulling one over on them.
Yeah, no, I ask you the question because, you know, no CEO, especially somebody of Mary Barra's stature, wants to come out and end up having egg all over their face, if not omelet all over their suit.
Right. Right, and there are people that I've talked with who have said, look, if you go point by point in the Hindenburg research report, there are certain things that just don't completely add up. Now, the question becomes, if you are Nikola, do you get caught up in all of these? Now, you've confirmed one of their complaints, one of the things that they brought up in the report, that this was not a self-powered semi in the video. Doesn't matter that you didn't use it, you know, as part of the sales process for getting investors. You used it as a vision of what the company could become. A lot of people did think it was self-powered. So now you're in this weird area here where you've confirmed one of the accusations from Hindenburg Research, and then you're refuting the other ones.
Yeah. Phil, I appreciate you coming on with that news. Forgive me for looking away. I mean, Nikola's up almost 11% now, so it's at the highs of the day. Yeah. We'll talk to you soon. That's Phil LeBeau on top of the story, as always. A spike in natural gas prices as Hurricane Sally heads towards the Gulf Coast. We'll get those trades, and we'll do that straight ahead.
The world feels smaller when we're separated. And that's not good enough. We believe the world is a better place when we exchange what we have. That's why we've been driving global trade for over 160 years. And we continue to do so, even in these uncertain times. Because we're not here for good enough. We're Standard Chartered, and we're here for good.
We're back. It's time for the Futures Outlook now. Take a look at natural gas. It's higher today as Hurricane Sally makes its way towards Louisiana. Let's bring in Scott Nations now of Nation Indexes for a look at where he thinks it's going to go. What do you think?
Well, Scott, I think it's interesting that while Sally is headed right for a concentration of oil platforms, and some of those have stopped production and been evacuated, in general, the move is pretty short term. We've given back more than half of the gain that we had earlier today. If you look at crude oil, it's not up at all. And if you look at the natural gas options, you see nearly 5 puts trading for each call. So this is a move to fade to the upside. That is, I would be a seller of the October contract at $2.40 if I got the opportunity to do that. Target to the downside would be 210, which was the low of the move before Hurricane Laura. Stop to the upside. We're always going to trade these with a stop, and particularly something like natural gas, $2.50. I would watch this really closely. I'd be careful. Maybe this is one of those futures trades that you want to express by using options and defining your risk.
Yeah. All right, Scott, we appreciate that very much. Thank you. That's Scott Nations. Coming up, unusual activity as promised with Jon Najarian, plus our final trades are straight ahead on the halftime report.
It all started very early. At the age of 11, I decided to pursue tennis and made it my purpose. It's actually not necessarily about being better than others, but it's about never being entirely satisfied and striving for more. Partnering with Credit Suisse was a big decision for me. It's important to me that there is a synergy between both myself and the company I'm representing.
Russian tech giant Yandex has bet on self-driving cars. The company announced earlier this month that it would be spinning off its joint venture with Uber into Yandex Self-Driving Group.
As part of that transaction, we purchased some shares from Uber, as well as injecting $150 million additionally into the business to support the R&D of this venture. I think going forward, that particular focus on AI and machine learning will be critical for success.
Brian Sullivan.
Good morning.
Worldwide Exchange on CNBC.
The Bond Report is brought to you by PIMCO.
From a tourism sector perspective, we have consolidated, put together with the industry and the sector what we deemed as a recovery plan for the province. If one considers the contribution of tourism in the province from a GDP perspective, you're talking about 18%, which translates to about 67 billion. Seriously affected. One of the things that we have been acutely aware about it is that we need to have to box cleverly in this. So it's a smart marketing messaging, encouraging supportive messages to the general public so that people do not forget about the wonderful offerings that the province has to offer. So we've been planting messages in all the social media platforms so that people are able to keep in mind about the hidden treasures and the jewel that the Eastern Cape has to offer.